Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So since this week we will have the Fed meeting, overall activity stands relatively low, not only in the gold market but on the Forex market as well. And probably this situation could last till the Wednesday. So meantime, market keeps in general the bullish sentiment, and the performance that we have suggested in our weekly report with the probably deep retracement, it still could happen, especially with the performance that we see on interest rates. But at the same time, it's definitely downside action has the feature of the retracement, the signs of the retracement. It's not the way how market usually drops. It's very choppy, a lot of overlapping candles, gradual action, so it mostly suggests it stands in favor of the bullish context and suggests that sooner rather than later, but upward action should continue. So major activity could return on the market once everybody will hear the statement from the Jerome Powell. Nobody expects that Fed will change the interest rates or give some hints on the possible changing of the policy, but they could provide some comments on their outlook of the United States economy, some comments to current trends and statistics that have been released on the market. Maybe something fresh they will tell about overall assessment and maybe some changing of the forecasts or something of that sort that could make the impact on the markets. So it'll just let the market to understand in what direction Fed are thinking. So by the new hints, they could make the suggestion on the direction where when the Fed are pushing markets to, what the position they have. So that might become important. Meantime, on the daily chart, picture mostly stands the same. There are two moments that we need to keep an eye on. First of all, as you can see, price coming close to the MACD predictor and could start flirting with this within the today session, maybe tomorrow. And once the grabbers will be formed, that will be great, as it could become the pattern that will trigger the upward action. So first to the 1805, but as we said, investors mostly for anticipate possible action to 1850 area. So don't exclude the chance that market could reach it, because they consider it possible breakout of 1.5% area or on interest rates, and that makes gold proceed to the 1850 as well. It's possible. So second moment on the daily chart that we have to keep an eye on is, of course, our invalidation point. So here, to keep the bullish context, market has to remain inside this upward swing. So we could accept some retracement to this level or maybe lower levels, but price should stay preferably above this 1750. But at least inside of this upward swing above the 1723 lows. In the case if drop will happen and market will drop below 1723, that will erase the short-term bullish context and means that market will challenge these lows and be ready to drop further to our long-term standing targets around 1640. So we already talked about it. So on the 4 time frame chart, that's the pattern that we discussed. On weekend we said that this drop was relatively fast, and it suggests that probably we could get another swing down here. So market currently stands in 1770. So overall price action stands really heavy and definitely doesn't show that market is turning up. So this mostly some sideways consolidation. Also take a look, the grabber could be formed here. That suggests the taking out of these lows. And it means that in the shorter term, market could reach this ABC top XOP target 1760. That will be the destination point. Additionally, since we have the 1750 confluence support, that's our preferable area where we could think about taking the long position, just because it's very strong and its previous top as well. So it's more chances that market will show bounce up from here. With the setup that we have on the hourly chart, let's take a look. We talked it's possible it also could be some kind of the hand and shoulders. So that's an XLP 1760 that we talked about, but also it could be some kind of the larger ABCD pattern with the OP around 1754. So we need to keep an eye on the pace of this activity here. And in general, we could say that an area between 1754, 55 even, 1760, that's the area where we will have to make the decision where we would like to take a long position in the gold market or not. On the interest rates, we'll take a look. Market currently is trending higher, but its overall upward here's action stands approximately the same as on the gold. It's very heavy. Sideways action. Market here it has formed, it could be a reversal candle. And it also suggests that, well, this doesn't suggest, better to say, it doesn't suggest yet this upward reversal and acceleration. And the technical, it more look like the preparation for a possible challenge of this support 150 area. Fed, of course, could make strong impact on overall situation, could change the technical picture, but currently it looks so that as interest rate keep chance on the further downward action challenging on 150 area, as the gold market shows just a retracement and keep chances on a breakout of the 18 even, and everything stands mostly according with our trading plan. Better keep watching for a downside continuation, some deep retracement, and for us, an area between 1755 and 1760 is an attractive area where we could consider taking the long position.